Samil Mehta joins us. Let's connect with him. Let's talk charts, technicals. Samil, a great Monday, but a sober Wednesday and a sober Tuesday and a lackluster Wednesday. What does that mean? Is the market running out of steam?
There's a lot of uncertainty still remaining. If you see India Wix, it is still trading at 17, 18 levels, and the normal levels would be around 12 or 13, maybe 14 maximum. The normal, I would see Nifty as consolidating at this point of time between 25,000 and 24,500. That's what we saw previously as well. In the last couple of weeks, the markets were trading between 24,500 and 24,000. We broke out of that range, and we now are trading between 25,000 and 24,500. So now what I'm expecting is one more day of consolidation around 24,600, 24,700, and then breakout of this range on the upside. The next targets for Nifty would be 25,300, 25,200 levels. So that would be my target in the very short term. In the medium term outlook, of course, it is positive, and I'll be looking for all-time highs. But at this point of time, let's just take a step-by-step approach. And of course, we will see a lot of sector rotation. Right now, metals are looking good. IT is looking good. They're bouncing back. So I think we should go sector-wise. Defense has already started and given a very good rally on the upside, but metals and the metals are looking great at this point of time. So yeah, sector rotation is going on, and we should focus on sectors rather than Nifty and Bank Nifty. Of course, Bank Nifty is looking great as well, broken out of that range, and I'll be expecting high top, high bottoms formations to start very soon. Maybe in next couple of days, Nifty, Bank Nifty would start outperforming. So that's what I'm expecting.
All right, great. Thank you very much. Kunal aa gaya. Hello. Little late, right?
No, I was perfectly on time.
We started the first comment with you always.
Yeah.
Okay. Better late than never, isn't that? That's what they say.
Yeah.
Let's look at it. What should we say? The same thing for the market?
Yeah, same for the market, same for the FIs making a comeback. Better late than never. I think the first 2-3 months of this calendar year.
And for the Bank Nifty also, better late than never.
Yeah, absolutely. Why not? And in fact, with PSU banking stocks in the last 4-5 days, I think showing some strength. So, the mixture is getting a lot more interesting for the markets, because right now we are not too much heavily dependent on the, the previous large cap names. For example, the last 10 days, you've not seen any major movement coming out into large cap stocks. Look at Reliance, the stock has been just at 1400 mark, plus minus 20 points for itself. HDFC Bank is at 1900, 1950 range. ICICI Bank, and then you've seen Axis, Kotak Bank, Bajaj Finance, Finserv. And these were the strongest performers in the first 2-3 months of this calendar year, and especially at a point when the markets were hovering around the 22,000 mark. So that goes to show that the market breadth is opening up. The market, we are looking at tier 2 sectors, tier 2 stocks within the performing sectors making a strong comeback. That is a very strong signal, because when you see market breadth opening up with the index consolidating at higher levels, that's generally a very, very positive sign from the index perspective. And now we are looking at 24,500 as a fresh base. We were discussing a couple of days back also that any dips towards 24,500 mark should be taken as a good contra buying opportunity. So maintain that stance, and now with many of the sectors like defense, you've seen PSUs, etc., making a further comeback, I believe that the market strength could get a lot more better.
Okay, that's that on the overall market construct.
If you like this video, then like, share and subscribe to ET Now.